Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the December 7th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in 877-927-6648. If you can't dial in, we've got you covered there too. Go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, a mixed bag out here. The Dow and the S&P are off 193 and 11 points, respectively. The NDX is up 35. The Russell just slightly above the flat line. The semis are up 4. Spot volatility up nearly a buck, trade on 21.77. Gold's up 29. Silver's up 60. Light sweet crude is off light sweet crude is up 12 cents. The U.S. dollar is just slightly up. So you got bonds, you got the U.S. dollar. It's a beautiful thing out there. But let's go take a look at the markets. During that 1 p.m. update, if you didn't catch that here, I'm just going to pull this over. And here is really our overall market analyzer for all of the U.S. indices, the major U.S. indices that we track. Of course, for those that you don't track those, you've got your index ETFs, the diamonds, the SPYs, IWM, Qs, and so forth. Then we've got the sectors inside the S&P 500. I've got our 4 main equity future contracts out here. We've got some metal information, oil and gas, bonds, other commodities, and some of the other popular ETFs. Now, what this helps us do is just understand, without having to go look at the charts, what are the signals out here? Do we have any signals to be concerned with? Now, when it gets populated like this means a lot of pink out there. A lot of that pink, the reason why it's pink, it's giving us the signal of a top out here, potential topping patterns. So we've got Rhodes momentum indicator signals. We've got some seventh wave move patterns out there, like in the NASDAQ composite. Inside the S&P for its daily time frame, we've got TD9 count tops that are out there today. So if there's going to be a top, what you and I will see is that should occur between now and Wednesday. So we've got a plethora of signals out there, and that says to pay attention. Now, the cool thing especially about those TD9 count patterns that are out there, is that if they don't work, it tells us about a strong momentum move to the upside for that specific time frame trend. The trend that we're talking about here is the daily time frame trend. So let's take a look at the S&P as an example. You'll see that Friday's bar was bar number 8, even though today's high has not taken out Friday's high, doesn't need to. All that today's bar needs to do is close above the price point of 36.62.45. And if that takes place, then you'll have a confirmed TD9 count top. Now, we've got Stevie's green line on this chart. This is the S&P 500 daily chart. I don't know why it's got those profile levels on there, but I'm going to get rid of those because those really aren't valid per se. So let me get rid of that, remove that. There we go. Okay. Now, the key level of support that price would need to close below, sorry about that, to confirm the top would be Stevie's green line. And presently, that is pricing out at 36.75. As price moves lower, that will move slightly lower. As it moves higher, slightly higher. But use that 36.75 as a gauge for you. Inside the S&P 500. What happens if price doesn't close below Stevie's green line? The market conditions remain bullish. You could say that from the green line to the top of the 9-count pattern, that would be your neutral area, but it certainly wouldn't be bearish. It would be more neutral than anything else. So that's the S&P 500 out here. In the Dow, when I pull the Dow chart over, we don't have that same pattern. We don't have a TD 9-count top. Can the market top without it? Well, most certainly can. If we take a look at the pattern that is inside the Dow, to do that, it's really more of a trend line issue that it's dealing with. Here's the consolidation pattern. Here is the Dow in the lower left-hand panel. I've got two different trend lines that I've drawn. One coming off the high from June the 8th. The second coming off the high from either September 2nd or September 3rd. It doesn't matter. And then I've got another trend line that starts on September 3rd and runs into, in essence, it was supposed, I see it's shifted just slightly. Should have been the high of November 9th. Regardless, the Dow is moved right up into that trend line area, and that can be where price would deflect out there. So there's a potential for a top. In the case of the Russell 2000, it's got an A to B equals CD pattern. Today, right now, a little bit of a doji-style candle out there. We don't know what the end-of-day candle will be, but this would need a bearish reversal candle. Not likely to happen today, perhaps tomorrow, that would confirm that pattern out here. Inside the NDX 100, the NDX 100, because it had moved above Friday's high, now has a valid TD 9-count topping pattern. Remember, on the TD 9 counts, the high can come in on bars 8, 9, or the bar following 9. And this is the reason why I said the top would likely occur between now and Wednesday, really the final day being tomorrow. But we would know more on Wednesday whether or not the pattern is just simply going to be negated or be respected. What we're all looking for here are closes below the oscillator unchanged line. The line is green. Not till price closes below that will you get a confirmation of a change in trend, or at least a move back to some other key levels of support. So that's what's going on inside the S&P. That's what's going on inside the Dow, inside of the NDX 100. Let's not stop by taking a look at the Russell 2000. So the Russell 2000, as we saw, an A to B equals CD pattern. Price is beginning to move higher, doing less relative energy. So this has triggered the Rhodes momentum indicator signal, but this would need a bearish reversal candle. Again, not likely to occur today, and you'd also need to see a close below Stevie's green line. That's currently priced at 1873. Now, the indices since the elections, or since the Monday or the Sunday when Joe Biden was named the president-elect out there. If we take a look at how the U.S. market has moved out here, or many instruments, here are the U.S. indices, Dow, S&P, NDX, Russell 2000, so forth. You'll see rate of change. I've got the columns on the right. Rate of change since the Biden announcement. So that was that Sunday announcement, so it really began on Monday's trading session, just a few days really after the actual election. But the point that I really wanted to make with this chart here is, as we take a look at what is moving, what is grooving, it has been the Russell 2000 that has been the outperformer. Up 15% since the Joe Biden announcement, up 23%, not 20%, since the day after the U.S. elections. The only thing to outperform the Russell 2000 has been the semiconductor index over the longer haul out there. So why is that important? Well, that's important to understand what the big dog is doing. That big dog is the Russell 2000. And right now, the key level to be watching here is going to be its TD9 breakout level, which is at the 1879.90 level. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 194, S&P is off 12. Let's go to our first question. This one coming in from Ian B. And Ian wants to take a look at ticker symbol PFSI. That's PennyMac Financial Services, Inc. So he's just looking for an update as to what the charts are communicating to us. So the very first thing here that we can take a look at, Ian, is understanding where sellers are at. And for the daily, I'll give daily, weekly, and the monthly time frame out here. So here's your resistance levels. 60.43, that's daily. 61.77, that's weekly. 62.45, that is monthly. That's your resistance here. Support, 56.84, 51.76, and really all the way down at 30.53. Don't worry about the 30.53 level just yet. But you've got resistance in that 60 to 62-ish type area out there. That's what's coming from our TAS market profile charts. Let's go see if there's any reason to be concerned. Out here, take a look at any type of topping or bottoming signals. So for the daily time frame, this has a TD9 count. Now, this formed a TD9 count on Friday. The high was on Thursday. That's the high of the pattern out here. We can see that Stevie's red line turned green. We've got another test of that. Price is below that. It looks like price here is getting ready to pull back to the 56.84 to 55.82 level. Now, if this pulls back below 55.82, I should restate that. If it closes below 55.82 for 2 consecutive sessions, that's telling you that this could be making an A to B equals CD to the downside. At least that's what's coming from the daily time frame chart out there. So you'd be careful. So the real key level here, Ian, I know you're holding this for the long term. That's fine. But know that if you see a close below 55.82, it opens up the potential for an A to B equals CD to the downside. On the weekly time frame for this instrument, I don't have any real topping pattern, so to speak. I could draw in an A to B equals CD, but it wouldn't really look that great, so we won't deal with that. What we do know is price pulled back, tested support, That was your 51.76 level. Right now, price is trading in between. It's consolidating really with inside the bottom of that daily profile, 51.76, and the oscillator unchanged line, Stevie's green line at about 60.54. The monthly time frame out here, Ian, does have a confirmed Rhodes momentum indicator top, and this would suggest that price is going to pull back to its oscillator unchanged line in the 49.27 level. So to summarize, PFSI, be mucho grande careful. I don't even know what that meant. It just sounded good to me, and because I don't know what it's meant. But be very careful if you see a close below 55.82 out there for this specific instrument. I hope that helps you out, and thanks so much for writing in. The next question coming in from, let's see here. What do we got? We got Rick K. Rick K writes in. He says, hey, Steve, I'd like to take a look at Chronos, C-R-O-N. Is the ticker symbol for that. So let's go take a look at it, see how it is doing in relationship to its daily, weekly, and monthly profiles. And it's only the daily right now that you're concerned with, Rick. Price is consolidating with inside that daily profile, and that's in between 788 to 894. You're looking for an entry price. So the entry price on Chronos would be the bottom of that profile, 788, unless we see something else transpire out here. So 788 would be one number to look at. That is the bottom of that daily profile. If we take a look at the other daily chart out here, what do I have for you? Not much. So nothing that changes our view there. That 788 still becomes the figure. On the monthly time frame chart, if 788 doesn't hold, price will likely pull back into the 714, 676 area. Now, this does have a weekly TD 9 count top out here, and that formed last week. So, Rick, I know you're looking for an entry point. I'm going to say let's focus on both the daily and the weekly. The weekly because of the topping signal. The oscillator and change line changed colors last week. And oftentimes what we see over the coming sessions, it's a weekly chart. Coming sessions could be 4, 5, 6, 7. I don't have control over the coming sessions. But over the coming sessions, we should see price and that line catch up to each other. And that says to me that back to the daily time frame chart, very likely you're going to at least see a move down to the 788 area. So, Rick, I hope that helps you out with regard to Chronos. Thanks so much for writing in. We've got a caller, and that is John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Okay, this is John from New York, by the way.
John from New York. My apology. So we're getting John from New York. How are you?
Okay, how are you?
I'm doing well. Thanks so much for asking. And the ticker symbol you're calling about is VDE. Is that correct?
Yes, it's an ETF for the energy sector.
Okay. And tell me how I can best help you.
It seems like oil has topped and gas has bottomed. What would you recommend? I made a big bet on it, and I'm still in the red, but maybe it's time to get out because it went up 5% Friday. Over 5%. Okay.
So let's specifically talk about the Vanguard World Energy ETF. And the thing that you'd really want to understand, John, is what are the components within inside that? And I don't know what it is. I don't know if this is trying to emulate the XLE as an example. It probably isn't because it's got the name World in there, and the XLE really isn't necessarily the World Energy Index. So you'd really want to try to understand what's in there. In lieu of that, here's what I can share with you. As far as a resistance area that you're looking for price to clear, that level, because you're on the long side, is going to be 54.94. The actual high so far for the month is 55.10. 54.94 is the top of a bearish structured monthly profile. In asking that question, is now the time to sell? All that we know at this stage of the game is that prices run up into resistance, but the month is not over. It's only the 7th. So we don't know. On the daily time frame and the weekly time frame, price is above resistance. By the way, resistance would be 50.17 on the daily, 46.14 on the weekly. So when you said you got in a long position out here, but you're still in the red, this was a while ago. Is that what I'm sensing? Or
I was averaging down on the price.
Got it. Okay. So you also made a comment that light sweet crude is topping out there. So what I want to do is, because you had mentioned that, I just want to see what my charts are communicating. Maybe I can provide some additional information to you to assist you with that. So here, when I take a look at this chart for light sweet crude, and by the way, the symbol that I have up here is my composite symbol. This allows me, John, to stitch together all the other prior contracts, but also in doing so, create reliable TAS market profiles. These help us to understand where buyers or sellers are at. If you take a look at, now this also automatically draws in a nice little rising trend line, and there is no signal on a daily time frame right now that I'm looking at that says that light sweet crude has topped. So if light sweet crude, and in fact, light sweet crude on the weekly basis last week and the week before closed above a key level of resistance, which was 44.62. This is suggesting to me that light sweet crude wants to make a run up to the 54.18 area. Now, 54.18 is the bottom of its monthly profile, but everything that I'm taking a look at right now in light sweet crude suggests that it wants to move to higher ground. If that is the case out there, and we're going to go to a break, so I'm going to ask you to hold on through the break. But if that's the case, the question I would pose to you, but let's not answer that till we come back to the break, is how does that change your view of any action? Because when we began the segment, you were using that as maybe a reason to also jettison the position. This is Steve Rhodes with TFNN with John in New York. We'll be right back. We're taking a look at light sweet crude. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with John in New York. We're taking a look at the Vanguard Energy Fund and Light Sweet Crude. We're on Light Sweet Crude right now. So John, my signals do not show Light Sweet Crude topping. If that's the case, does that impact your thought process, your decision making?
Yes, it does. Because I thought it was consolidating, and this is like the top of its consolidation.
Yeah, so I don't see that pattern. Again, if we just take a look at the daily chart that's in the left-hand side out here, price is above resistance. First, it's in a very powerful upward trend line out there, and today's pullback was nothing more than a test and rejection of that level. And as long as price remains certainly above the trend line, but above 43.26 for its daily time frame, Light Sweet Crude is bullish and wants to run higher. That's confirmed by the weekly time frame chart because price is above resistance here, which is 44.62. Now look, you or I, something could take place in the next 5 minutes, which would impact everything. I can't foresee the future that way. But what I can do is take a look at the present and understand whether price is trading into resistance, below resistance, it's making a top with the topping signals and patterns that I use, and we just don't have that. And so even though on the larger term time frame, monthly and quarterly, prices below the bottom of their profiles, they become the next target levels on the way up, unless there's a new set of profiles that form for the daily or weekly, but those aren't present at the moment. And therefore, that's suggesting to me that price wants to move higher out here. Does that help?
Yes. What about gas? Has it bottomed?
It has not. One last thing. Oh, shoot. I'll try to give this to you for VDA. I'll go to natural gas in just a moment, but let me just give this to you here. If we take a look at VDE, this you can now also see Stevie's green line, the oscillator and change line. Even if price pulls back to 52.58 out there, that would be natural. That would be normal. That would still keep us in a bullish position. If price were to close below that, you would anticipate a further pullback into that 50.17, 49.41, 47.89. So VDE also remains in a bullish condition as we take a look at its daily time frame chart. Specifically with regard to natural gas, it has not bottomed. Why does Stevie say that? Again, we're going to look at the January contract here. And on the January contract, John, price is moving lower, doing it with less relative energy out here. And that signals, that generates this Rhodes momentum indicator signal. Now, what's cool about this pattern is if we get a bullish reversal candle, that will confirm the bottom inside of natural gas. Not until then will we have some type of bottom signal. Now, what's nice about that is if we go take a look at the XLE as an example, I'll just pull this over here and to show you when the XLE bottomed, it was with that exact same pattern. See here, if you're watching us on Tiger TV, price is moving lower. This is back into the end of October time frame. Moving lower, doing less relative energy, triggers that Rhodes momentum indicator signal, but it was that bullish engulfing candle that generated the bottom. Natural gas would have the same kind of pattern if we're to identify a bottom, and that has not occurred just yet. Okay?
Okay, thank you.
You bet. Thanks so much for calling. We'll look forward to hearing from John in New York again in the future. Next question coming in from Bob Y. Bob wants to take a look. Oh, that's interesting. Okay, so Bob says, hey, love your show. Please take a look at natural gas symbol UNG. Are we at a bottom yet? And you want to go along. So, Bob, you can thank John in New York for asking that question, and we just covered it. And the answer is no, you can't go. Well, you can do whatever you'd like to do. Do we have a bottom pattern? The answer is no. We need that bullish reversal candle. And the one I'd be paying attention to is not the UNG chart. It would be the underlying instrument, which would be natural gas, which may be the January contract. You've got to go take a look to see what is contained inside that natural gas ETF. I think it's an ETF, not an ETN out there. But assuming that's an ETF and it's got the underlying instruments, you just need to see which futures contracts make up the UNG, assuming that at least January is still a part of that. Trade the UNG off of that chart. So I hope that helps you out. And let's go to the next question. Next question coming in. Oh, Rick K. sent in another request. Can we provide a good entry point for APHA? Let's go take a look at it. Give me a moment here to get back here. APHA. let's actually type in the correct symbol. AFRIA, which is, let me get this going on my other charts too, APHA, is consolidated in between its a daily set of profiles out there. Those are the only profiles that it's trading within. Otherwise, price above the weekly, price is above the monthly. So your consolidation range here for AFRIA is between 868 and 730. 730 is the bottom of the box. You're asking for a good entry point. Right now, we would use 730 as that number. But let's go take a look at my other charts, see what other kind of patterns we might have out here. And, of course, depends on your aggression. Does Stevie's charts have a topping pattern? The answer is no. But price is consolidating in between that daily profile. Now, the pullback today, Rick, was close to Stevie's green line. That's at 791. So I don't know if you're an intraday trader. If price pulled back and tested 791, held that, you would have a trade between 791 and 868 out there. So where's the entry price out here? It's really 791 on an aggressive trader. It is 730 on a less aggressive trader, and a close below 730. Whether you're a very aggressive or sort of aggressive trader, you'd close it out if you saw a close below 730, because that would be signaling that price could pull back to $5.45. The weekly time frame chart out here, let's go see what kind of signals we have here. We do have wave number 7. That is letter G, so we can see a pullback here. That pullback could take price to 633. What I would suggest here is this is suggesting to you that we should see a further pullback in APHA. So watch the we'll call it 785 to 730 range out there. On the monthly time frame, what does Stevie have? On the chart patterns, nothing. So nothing for you to be concerned with at this stage of the game. So Rick, thanks for writing in. Thanks for writing in twice. And we don't have a ceiling on the number of times that you can write in or call in. So I hope that helps you out. The next question coming in from Hector and the fuel injectors. And Hector is asking about the GDX. He says using 1124 on the GDX. So let's go ahead and open this chart up. And Hector is looking at 1124. So that's going to be this little doji style candle out here. Using 1124 low, it's our A point. This is a small lightning bolt A to B equals CD to the upside. So yeah, I mean you could so here's the tough thing about that. Let's go see what the retracement looks like. So when I say the retracement, we're going to use your A point, which is the A point that you would use for an A to B equals CD. The B point is going to be the high, it looks like, of December 3rd, and the retracement, just a one-hit wonder, that's December 4th. Yeah, that's an A to B equals CD pattern, absolutely, because it was almost a 0.382 retracement. It was 37.37%. The B point at 36.14 is being taken out today. Let's see if the volume is confirming that A to B equals CD. The upside volume was 21 million, and you are at 14. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. So, Hector, we're taking a look at the GDX and the volume. We watched the volume at the end of the day. 21.1 million shares, what you're looking for as a close above the price point of 36.14. If you receive that, then you'll get that confirmed A to B equals CD pattern with a price objective of 37.95 being the 1-to-1. 38.74, 1 to 1.272, 39.74 being the 1.618 expansion. Hey, look, if price closes above 36.14 on lighter volume, all that does is set up a potential for a Tiger Gartley. That'd be a sell pattern moving into one of those areas, 37.95, 38.74, 39.74 out there. So I hope that helps you out, Hector, and thanks so much for writing in. Alex writes in, boy, these are big letters here, Alex. Steve, Friday, December 4th, S&P down, NASDAQ reached all-time closing highs. Does this change the chance of going back to the March lows out there? I don't know if it really changes anything out here, but market conditions are bullish as we speak right now. We have those valid topping patterns. Maybe you didn't catch the beginning of the show, so if that's the case here, I'm just going to what the heck is going to go? Give me a second here. I know we just have to take things one step at a time. And so that one step at a time right now is watching the markets over the next really 2 days, today, tomorrow, Wednesday, at the latest out here to see if these topping signals take hold. And on the daily time frame, we've got a bunch of Rhodes momentum indicator signals. We need a confirming bearish reversal candle to confirm those patterns. We have plenty of TD9 counts. You can see those decorating so many of the indices, ETFs, sectors inside the S&P 500. We've got seventh wave counts as well. So this just tells us just simply to be on guard. Now, be on guard for what? Be on guard for some type of short-term top, some type of pullback. Pullback to where? That's usually the question out here. Well, the wheres are usually answered for us by taking a look at where is support and resistance. In this case here, where is support? Well, inside the ES Mini right now, the first level is 36.35. Price would need to close below 35.22, Alex, to confirm a change in trend. In the case of the NQ, well, this is interesting because this just popped up on the screen. It was not here earlier. We have a brand new profile that is attempting folks, this is important. It is attempting to form in the NQ. Resistance is 12,572. Support is 12,374. I've got Stevie's advanced Doppler tool up here, so we won't really know until 6:01 this evening whether this takes hold. Now, it could vanish between now and then. That would just tell us something that it doesn't exist. But to the extent that it does, and while it is trying to form, this is still valid information. With regard, if you say, Stevie, where's resistance? Well, the answer is pretty simple. 12,572 and support is at 12,374. So we've got two callers. Oh, I see we've got Scott in Colorado Springs. Scott, thanks for calling. Thanks for holding. How are you?
Good. How are you, Steve?
Very good. My apology for leaving you on the line there, but we'll make up for it. We'll make up for it. So the euro, U.S. dollar, tell us what you're doing and how I can help you.
I have a 9-count top on the daily. I was wondering if you do.
All right. Well, let's go find out. Let's pull over the euro, U.S. dollar. Let's pull over this set of charts here. And on the euro, U.S. dollar, I have a TD 9-count top that formed on Friday. So that lines up with what you're looking at. Yes?
Fantastic. Yeah. I had one quick question on how you handle things. Now, when I see a 9-count top, what I do is I drop down to the 30 from learning from you, the 30-minute, and I wait for support to break.
Yes.
How do you handle when price gets back above that support? Do you simply leave your original stop in place and just let it work out? Or do you do something? I've never heard anybody ask you the question.
Yeah, and so we'd have to look at a real live example, because it would depend on what.
Like the 30-minute on the euro had a TD support level of 12.1108. Price got below it, closed below it, and then got back above it. And I was just wondering how you handle a situation like that in your personal trading or whatever.
So here's how I can. So what I've got up on my screen. So thanks for the question, first of all. What I have up on my screen is my 30-minute chart for the euro US dollar. And I've got the only TD9 breakout support. So which one were you using? 121.09?
121.108 is what I had for a low. Okay. 121. Yeah, 121.10 is what I had for the low of that 30-minute candle.
So here's what I'm going to do on this chart here is just give me a moment so that I can extend those TD9 breakout levels, because it's really the chart that helps us to answer your question. So, it's a great question, but it's really the chart patterns that we would fall back to help us answer that. So now what I just need to do is find this tool. If you give me a moment here to do that, my apology. Here we go. So no, that's not it. That was the A to B equals CD. That's not it. Oh, my goodness gracious. Sorry about that, Scott, and going through this stuff.
No worries. And if it's too much, Steve, that's fine.
It's not. It shouldn't be that difficult for me. I don't know why it is, but that's okay. Okay, here we go. Okay, so let me just put it at 100. And that's going to certainly pull all these things over to the right. So your question... almost did it. When it gets so in the euro US dollar, it formed an A to B equals CD to the downside. Did you get that too on your 30-minute time frame chart? So as price was moving lower?
Yes, now that you mention it. Yes.
You see, because it's kind of like if that pattern.
I wasn't looking at it when I was trading it earlier.
Yeah, it's just that when it moves above it gets back inside that support level, especially if it's made some kind of a bottoming pattern, that's a suggestion to you that price is going to move higher. And then you're just simply looking for the resistance level, with the ultimate resistance being that TD9 count topping area, which I've got at 1.2171 as the levels out there.
I think maybe I concentrate too much on the TD levels, where then I become blind to other patterns at times.
Got it. Okay. I understand that. Yeah, so
is what it looks like.
Yeah, I mean, obviously I'm using a combination of tools and patterns out here, but you're familiar with those too. So I'd let if it forms a different pattern, then it's changed what got you into the trade, so to speak, for that specific time frame.
Right. Okay, thank you, Steve.
Hey, you bet, Scott. Thanks so much for calling. Good to hear from you. That was Scott in Colorado Springs. Steve Rhodes with TFNN. We'll be back this time with John in Philly to take a look at the ESP.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're going out to Philadelphia to speak with John. John, thanks for calling. Thanks for holding. How are you today?
Steve, I'm very well. Thanks for taking the call. I apologize. I missed the first 15 minutes of your program where you do a fine job of outlining the indices. So my question for you is on the E-mini S&P futures. And the question I've got for you is in the context of this contract rallying just stair-step higher, uninterrupted, frankly, since the Friday, November 20th low. Mm-hmm. My question is, what level under which it must fall to give you a signal that a multi-day correction lower has begun?
Excellent. So the first level would be 3674. That as your range out here. 3674 is the oscillator and change line. If you take a look at that stair-step progression to the upside, we've only had one candle below that since the early part of November, and so we need to see two consecutive closes before the oscillator and change below the oscillator and change line to suggest some kind of retracement. Today is going to be, it looks like it will be bar number 9 of a TD9 count, meaning the top could form today or tomorrow out there. And so a close below the oscillator and change line would be that first signal out there, John. The next signal would be breaking through a key level of support on the 30-minute time frame. That key level of support has been tested so far right now during this half hour and the last half hour. And that was at 3682.50. So a close below 3682.50 says we go back and test the daily oscillator and change line. A close below the oscillator and change line says we may have the beginning of a short-term change in trend. Does that help?
Great. Thanks for the input. You have a good day, Steve.
You bet. Folks, stay tuned for 2 more great hours. We got our favorite polar bear, David White. He's up next. After that, Tom O'Brien to take us on home. And I'll be back with you on terrific Tuesday. Have a magical, magnificent Monday. Thanks so much for being here, folks.